Hello traders and welcome to another video review. Today is Friday, April 24th, 2026. Let's take a look at the Forex economic calendar for today. So what do we have here? The Japanese data are first. Those are medium data, as you can see, national CPI, core CPI, mixed bag of data, but generally better than expected. Core retail sales and retail sales in the UK, mostly better than expected. Nice shopping spree in the UK. Unemployment rate in Poland scheduled for release at 9:30. Then 30 minutes later at 10 o'clock we got German data scheduled for release, business expectations, current assessment, and IFO business climate index. Core retail sales and retail sales data from Canada scheduled for release at generally 2:30. And then we got Michigan 1-year inflation expectations, 5-year inflation expectations, consumer expectations, consumer sentiment data from the USA. This data are scheduled for release at 4 o'clock. Barker Hughes oil recount and total recount for all of you oil traders are scheduled for release at 7 o'clock. And then we got the CFTC speculative net positions data. So without any further ado, because there is no high impact data release, let's switch to the charts and we start obviously with euro dollar. Friday is the last day of the week, obviously, and this is the Friday 24th. So next week will be the change, basically, of the month, and we switch from April to the May, and that will be the last week of the month as well, next week. So today, close and weekly close might be quite important. Just a slight reminder. Now, what we have here on the euro-dollar movement to the downside, down towards the level we nailed at the beginning of the week, 1.1670. Upper range of our demand zone is being tested into almost extremely oversold conditions. All right, so quite nice situation. We are back inside of the channel, but the channel itself is fine. There was a breakout out of the channel already. Nevertheless, this zone here is the key zone to have on the chart. There you go, because there should be some reaction from the market when the price gets towards the zone, right? So there's either a bounce or maybe a breakout. Breakout lower is obviously bearish, and it's even more bearish than it is right now because the very important demand zone in this situation would have been violated, right? So bounce is the scenario we expect, and the breakout will deteriorate the price even more, setting 1.1850, the high from the April 17th, as the swing high, and confirm this is the swing high. So if there is a high, we are looking for a low. British pound for our time frame chart, quite a similar situation, however very important change on the 4-hour time frame chart. Reversal from 1.3484 lower towards 1.3446, and now we are heading towards this technical support, 1.3380. So nice situation here. Movement lower is being continued. I think we should remove this line, and I will place this is just a line change, nothing changes drastically here, but this is our swing high. The swing high is confirmed because very important technical support that was tested for at least a few days, this is almost whole week, has been violated, new low. And that's why the swing high looks like it is confirmed. So from our perspective, right now, from the perspective of the technical analysis, this is the most important technical resistance right now, right? So it's good to have this level on your chart and keep an eye on it, obviously. US dollar versus the Japanese yen is the most boring chart I have seen the whole month of April. Not much is going on here. Typical range trading. We have the extremely oversold conditions, we have extremely overbought conditions, we have demand zone, we have the supply zone. Not much is going on here, so let's leave it like it is, still inside of the range. If we even zoom out to show you guys what is going on, there you go. This is from the bigger picture. That's the beginning of the year, whereas there you go, this is the beginning of the 2026, right? And this is one big one big range. It might be a partial accumulation range. Oh, that's interesting, because that might be first move to the upside, partial distribution, partial accumulation, and now it all depends where we go. If we go to the upside, then it was accumulation. If we go to the downside, that was the distribution or partial distribution. However, because the dips are being bought back up, looks a little bit more like a partial accumulation for me. No, not too many evidence, clues, indications of a distribution just yet. Gold doesn't shine like it used to. We went down from 4,889, and just recently we've made a low at 4,657, but we are still trading inside of the range. Please remember that I said it many times, we completed zigzag pattern, which is corrective pattern, free wave pattern to the downside, right? This is 5 mixed 5. Perfect example of the corrective pattern. This situation here doesn't look impulsive. It doesn't look like it wants to continue the uptrend which is in the background just yet, which is why I guess that would be some sort of the connector. That's why we can change our scenario. That's only a scenario. For the double combo. What double combo means? We got the swing high, all-time high, 5,597. ABC to the downside was the wave W. So it's a complex correction. And that possibly is wave X that is completed, or it's about to be complete. We don't know it yet. And we're still waiting for the wave Y to the downside to complete the whole complex and time-consuming correction, right? So this cycle has been seen for many weeks. This is the end of the January. This is the end of the January 2026, right? So many weeks of some sort of the mambo jumbo, corrective mambo jumbo on the chart, right? So there is invalidation, goes with nice, strong movement to the upside in gold, impulsive movement with big candles, something like this maybe. Then this situation here is invalidated, and there is ABC to the downside, completed correction and uptrend continuation. But so far, we don't see this kind of the development yet. S&P 500 can't get out of the range after making all-time high. Now, neither bulls nor bears know what to do. The market is consolidating the recent gains in a very narrow range between those two levels here. We got it on the chart already, as you can see, works perfectly from the upside, from the downside. Momentum is a little bit lower than it used to be. Nevertheless, it's coming off extremely overbought conditions. This is why we need to wait to see what will happen. Basically, bulls are in charge of the market in the short term. It's obvious. This is impulsive situation to the upside. Looks like the S&P 500 want to go higher. Crude oil broke above the technical resistance we got on our chart, 95.18. Local high 98.37, and keeps slowly but surely grinding higher. Nevertheless, after the breakout below this trend line, the orange one, there is still a rather bearish bias for the crude oil. Not a big, massive bearish bias due to the geopolitical situation, which is why maybe the bulls wants to cover this gap towards 105.74. That would be enough for this movement to the upside, but please notice that we are very, very close to the level of 80. We are very, very close for this market to be extremely overbought, and there is still are a retail gap to cover lower. This is the blue rectangle. So right now, bulls are temporarily in charge, pushing the prices higher. Nevertheless, it doesn't actually look like a massive movement to the upside going on crude oil. And last but not least, the Bitcoin. The Bitcoin extends the movement to the upside as well, extends the whole flag pattern. And so we keep tracking this flag pattern day by day. For now, we almost hit the upper flag pattern line. 79,473 was the high. These days we got a little bit of a pullback because of the extremely overbought conditions. We went as low as 55 points. For now, nevertheless, the local technical support worked beautifully. Look at this. Local technical support was tested, 76,903. And now it's quite clear situation because breakout lower is bearish and we possibly test this area here. So we know it already, and bounce from here like we have right now. Very nice pin bar is generally an attempt to attack the level of, this is our level, 79,473. So right now, a little bit of the consolidation, a little bit of the downside pullback. Nevertheless, bulls are still in charge of the market. We should expect bigger movement soon. Nevertheless, the weekend is coming, and the Bitcoin these days have a tendency for the weekend to continue the pullbacks, continue the correction, right, in the during the weekend. So please take a look at this chart and draw your own conclusions. Friday is not a perfect day for getting into the trades that might result in weekly gap or something like this. So that situation here, if it clears before the weekend, it would be really helpful. But will it? I don't know. No idea. For now, it looks like the bulls wants to continue this higher high and higher lows consecutive situation, consecutive plan. Looks good for now. Let's see if it will work to the end of the day. And that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.